Today, we travel back 150 years to one of the most devastating financial crises in history. It started in Vienna in 1873, spread like wildfire across Europe and America, and plunged the world into what economists call the Long Depression. A downturn so deep, it lasted more than 2 decades. This is the story of the crash of 1873, the panic that reshaped global finance, debt markets, and politics. The mid-1800s was a golden age of optimism. Railroads were the internet of the 19th century, opening new frontiers, connecting cities, and attracting billions in investment. In Vienna, Berlin, Paris, and New York, investors poured money into railways, real estate, and new industries. Then came the Franco-Prussian War of 1870. Germany's victory forced France to pay a massive indemnity, 5 billion gold francs. That money flooded Berlin and Vienna, fueling even more speculation. By 1872, the Vienna Stock Exchange was the hottest market in Europe. Shares of railroads and banks soared to unrealistic levels. Everyone thought the boom would never end. But on May 9, 1873, it all came crashing down. The Vienna Stock Exchange collapsed in a single day. Railway shares tanked, banks failed. Ordinary investors were ruined. The government tried to restore confidence, but Austria-Hungary was forced to suspend gold convertibility. That was the first sign that even governments were in financial stress. The panic spread instantly, to Berlin, Paris, London, and soon across the Atlantic to America. In Germany, the so-called Gründerzeit boom collapsed. Dozens of new companies and banks went bankrupt. The Franco-Prussian indemnity money had fueled a bubble. Now it was gone. In France, still recovering from war and the Paris Commune, lending dried up. The shockwaves hit the Ottoman Empire, the Balkans, and Latin America. Countries that had borrowed heavily from European banks suddenly found their credit lines cut off. By 1876, the Ottoman Empire defaulted on its debt, one of the largest sovereign defaults of the 19th century. Creditors even set up the Ottoman Public Debt Administration, seizing control of customs revenues. This was the beginning of a long wave of sovereign debt stress that haunted weaker economies for decades. In September 1873, the panic jumped across the Atlantic. In New York, the mighty investment bank J. Cook & Company collapsed. Cook had been financing the Northern Pacific Railroad, one of the largest and most ambitious railway projects in America. But it was overbuilt, over-leveraged, and unsustainable. The result? The New York Stock Exchange shut down for 10 days, the longest closure in history. 18,000 businesses went bankrupt. Nearly 100 railroads failed within 2 years. Unemployment in U.S. industrial cities surged to 15%. This was America's first great modern depression. But this wasn't just a short panic. The crisis of 1873 triggered what economists later called the Long Depression. For 23 years, the world suffered from deflation. Prices of wheat, coal, steel, and industrial goods fell by almost 40%. Stagnation. Growth was slow and uneven. Debt stress. Governments and businesses struggled to repay loans. Social unrest. Strikes, riots, and the rise of socialist and labor movements. Politically, the Long Depression changed everything. Countries abandoned free trade and turned to protectionism. Germany's tariffs of 1879 were the start of a new era. Colonial expansion accelerated. European powers, desperate for new markets, launched the scramble for Africa. Nationalist and anti-Semitic movements gained momentum, blaming bankers and foreigners for the crisis. The Depression only began to ease in the 1890s. New gold discoveries in South Africa, Alaska, and the Yukon expanded the money supply, helping economies escape deflation. At the same time, new technologies, electricity, steel, chemicals, and communication, powered a fresh wave of growth. But the scars of the 1873 crisis remained. It had shown the world how fragile global finance could be, and how quickly speculative booms could destroy governments, banks, and millions of lives. The crash of 1873 and the Long Depression are often forgotten today, but in many ways, it was the first truly global financial crisis. Its lessons, about speculation, debt, and contagion, still echo in every modern recession. If you found this history useful, don't forget to subscribe to Fellow Investors.